10-year note yields nudged higher today, just slightly. Got as high just shy of 130, ended the session right around 126. Spent most of the day in between there somewhere, but ultimately waiting for those minutes to come out, which we'll talk about in a moment. Taking a step back, the 10-year note yield has been in kind of a range between 120 and 140 over the last week and a half. Taking it back to the early part of July, you can include that. However, there were a few sessions where we did dip below 120 and one where we even rose above 140. But right now, the comfort trading range that we're seeing is between 120 and 140. We did have a 20-year auction today, which was well received. Came in about 4 basis points below last month's, but ultimately the supply trade really hasn't had an adverse effect on yields. Typically, when these supply weeks come, we do see yields go higher to meet some of the paper hitting from the Treasury, issued from the Treasury, but we did not see that today. At this point, market had eyes all on what was happening this afternoon. That's those Fed minutes, which we'll talk about in a moment. Now, what does this mean for volatility? Well, if you check out that CVol index over at cmegroup.com, you'll notice that volatility has been trading rather steady, but it has been in a decline the last few sessions. As we continue to trade this comfort range, that's what's going to happen. Volatility is going to go down until we see some kind of a threat of a breakout like we did last week when we saw the market break down. We saw a low of 113. Yes, volatility bid then as we looked to break out of the range, but quickly recouped back into the old range. And look what happened. Volatility went back down. So at this point, volatility will remain very directional as long as we hold somewhere in that 120 to 140 range without threatening to break out. Volatility should continue to soften. That's exactly what we saw today. Now, what did happen with those minutes from the Fed today from the July FOMC meeting? Well, I think the market was anticipating some kind of talking about tapering. When were they going to talk about tapering? When were they going to talk about initiating a tapering process? And at this point, the Fed, while they want to initiate some kind of tapering by early 2022, it could come earlier, it could come at the latter part of 2021, but there's still a lot of uncertainty out there when it comes to this new variant and its effect on economic growth. And that, along with a higher inflation being transitory, meaning it's not here for the longer haul, that's what the Fed has been telling us since the inflation numbers have been rising rather rapidly. Will the inflation be sustainable? Will the jobs numbers be sustainable? The Fed wants more proof. And after what we've just been through over the last 18 months, I don't think you can blame the Fed for wanting more proof to getting this right. What's the old saying? Measure twice and cut once. And at this point, Fed wants to do this the right way. They're going to continue to wait, watch, and monitor. Ultimately, we do want to get back some kind of normalized Federal Reserve monetary policy. But until we get all the pieces in place, the Fed's going to be patient. And they continue to use the term seeing further progress. And that's going to kind of be their theme, I think, as we head into the Jackson Hole Symposium next Friday. I don't think they're going to tip their hat as to which way they're going to lean as far as tapering or when they're going to be raising rates. They will just talk about getting everything in place and then initiating when the time is right. And that's exactly what we learned today from those minutes, although we already knew that. So the market didn't make a big move after the minutes, kind of in anticipation. We may have seen a little bit of a knee-jerk move, but nothing off the chart. So 10-year note yields continue to trade that range that they've become very comfortable in between 120 and 140, hovering just shy of 130 today. But again, next week brings that Jackson Hole Symposium, which could be a game changer if the Fed decides to tell us what they're really thinking.